Let's move on to equity. This is an example of a divorce equity buyout, which is the main type of loan that I am brought in on, typically early in the divorce process by folks like these attorneys here, to figure out if we have the ability to let one spouse keep the marital home. In this example, we have a property value of $500,000. Title is in both of their names. We have a mortgage payoff of $400,000. The loan is in both of their names. Therefore, they have $100,000 of equity. Let's say that she desires to stay in the home. We call her the in-spouse. She's staying in the home. He's moving out, he's the out-spouse. Again, nice gender-neutral terms here. Out-spouses typically want two things in order to agree to give the in-spouse the home. Condition number one is remove me from that debt. That $400,000 loan, I don't want to be a part of that debt anymore, so get me off of that loan. Condition number two, I want my divvy. $100,000 of equity, I want $50,000. So in this example, she is seeking a new loan for $450,000. I'm leaving out closing costs for this example. So question for you, what is the current LTV? Current is $400,000 divided by $500,000. 80%. What is she desiring when she gets her additional 50? 90%. Sounds pretty easy, right? On paper, this should be no problem. Let's just do the paperwork and get it done. But here's where we have issues with mortgage guidelines as they pertain to divorce. There are two different categories of refinance. And I'm citing Fannie Mae and Freddie Mac here today. So not my company, not the company next door, Fannie Mae, Freddie Mac that create these conforming or conventional guidelines. The first type of refinance is called rate and term. The second is called cash out. In this example here, we need to go up to 90%. The max LTV is 97%. Game on, we're in good shape, right? But the max cash out is $2,000. We want 50. Let's move over to cash out then. Unlimited cash out. Now we're talking, but we're capped at 80%. We're already at 80% before she pulls any money out. I'm not throwing mud at my competition here, but there are a lot of untrained mortgage professionals, especially working in these inbound call centers, that would simply look at this and say, she wants more than 2,000 and she's above 80%, no loans available, she needs to sell the house. And so there's people across the country getting bad advice that are literally selling their house, moving their kids out of their house for no reason whatsoever because they're talking to people who don't know the guidelines. So there is a way to call a divorce equity buyout a rate and term refinance. There's some certain conditions we have to maintain. We do this quite a bit where we're pulling significantly more than $2,000 out, and yet being able to call this rate and term. So again, a big reason why we want to bring in CDLPs in these situations, and they're all over the country here. The CDLPs are trained on how to work with the attorney and the divorcing spouse to be able to craft the guideline or the orders in a way that Fannie and Freddie will call this rate and term.